And now it's time for Development Debates, where we dig deeper into some of the questions shaping the future and present of China. Today, we will discuss China's purchase of U.S. national debts. China shook the world when it became the world's largest buyer of U.S. national debts. Many in the U.S. were concerned about the leverage the Chinese government might have over U.S. policies after the purchase. Others were also excited by the idea that the purchase could improve U.S. and Chinese relations. On the Chinese side, many were concerned about the safety of the investment. Some feared that the U.S. economy would continue to decline, which would bring China's down with it. Looking back on it, the fears seemed to be pretty irrational and normally just reactionary. Granted, they are still possibilities. Chinese economists are worried that the U.S. quantitative easing policies would result in the depreciation of the U.S. dollar. This matters to China since they hold $3.3 trillion in foreign currency reserves. Depreciation of the dollar means losses for Chinese investment. However, the fear hasn't kept China from increasing its holding of U.S. debts. A U.S. Treasury report last week said that in May, China increased its purchases of U.S. national debts by $25.2 billion. This is of significant note because it's the first time that China's holdings surpassed $1.3 trillion in total. The huge number makes China the world's largest creditor country for U.S. national debts. As China continues buying U.S. debts, Japan has reduced its holding. Japan is currently the world's second largest U.S. debt creditor. The report indicated that Japan held $1.11 trillion in U.S. debts in May. That's a $1.7 billion drop from April. Japan now holds $204.9 billion less in U.S. debts than China. Once the Federal Reserve implied that it would end the quantitative easing early, its public debt market fluctuated. Japan and other countries began selling on large scales. China kept buying in, though. Chinese officials have emphasized that as the world's largest national debt market, U.S. debts play an important role for China. They said that it's very normal to increase or decrease holdings in U.S. debts. Apart from the Chinese government's supportive announcements, some Chinese experts have also taken an opinion on the move. Financial commentator Liu Xiaozhong is one of them. Liu said that increased holdings of U.S. debts are a defensive strategy for China's economy. Adding U.S. debts might indicate that China would change its diversified foreign exchange storage policy. In recent years, China's foreign exchanges were mainly used to invest in foreign resources, mature industries, and real estate. These kind of overseas investments should be based on China's high economic growth rate. However, China now has to deal with sluggish domestic growth, overseas demand, overcapacity, and high debt-to-profit ratios. These factors imply that development based on investment isn't sustainable. Buying U.S. debt can be a good alternative investment. Even though U.S. debt now risks rising premiums, it has high fluidity. The high fluidity means that cash is easily available. Cash makes it easy to pay off international balances. The Chinese State Council has been dealing with lots of cash problems as of late, so more cash would be welcomed. It has been looking to speed up reforms that would ease capital account convertibility. Capital account convertibility is the freedom to take one currency and change it to another. The idea of establishing the Shanghai Free Trade Zone has meant that the Chinese government will allow individuals to invest abroad. This kind of diversified investment would make it easier to liquidate U.S. debt. However, financial commentator Chiu Lin doesn't think it will be so easy. Chiu wrote on his blog that U.S. national debt is actually a Ponzi scheme. They will never be willing to repay it, he said. Even though they do not want to repay the debts, it will have to wait at least 2 decades. That would be when the annual GDP is predicted to reach a growth rate of 10% or more. However, during 2001 to 2010, the average GDP growth rate in the U.S. was only about 3.9%. Now the U.S. government owes $1.3 trillion in debts to China. Such a large amount of debt makes it impossible for China to sell it. Except showing concerns to the U.S. government, there is nothing else the Chinese government can really do. If U.S. debts suffered downgrades, then China would have to take the hit. Chiu said no matter how government officials or other experts try to explain it, they will claim that it's harmless to hold more U.S. debts. A basic fact is that China uses its real products, cheap labor, and resources to transfuse capital to the U.S. Treasury. Chiu believes buying more U.S. debts is a, quote, truly stupid way. Despite Chiu's criticism, there is rationale for buying U.S. debts. It's still a safer investment than others in the global debt market. America's credit rating is still incredibly high, and the economy seems to be improving. The odd thing for China is that it isn't using its massive foreign currency reserves to improve domestic problems. With massive foreign currency reserves, the money could be spent on improving infrastructure and education. This would help lead to a more sustainable economy. It could also invest in foreign technology that could improve environmental conditions.